Happy VA Wednesday. Today we're going to be talking about why debt to income is not the only thing you should be paying attention to. So a lot of times I'll have people reach out to me and they'll be like, hey Jen, what's the maximum debt to income you guys can do? And I'm like, really? That is not the measurement we should be looking at. So today we're going to talk about a calculation that's done on VA loans that most people have no clue exists, including lenders that don't do a lot of VA. And this is where I see deals blow up, okay? So today we're going to be talking about residual income. Oh yeah. Okay. So first let's talk about the debt to income question. So the way that we work is with debt to income, as long as your credit's over 600, okay, we will go with what the computer says. So if we run you through the system and your debt to income's at 65% and we get an approve, that's fine, as long as you meet residual income. Now, we do have debt to income restrictions on lower credit. However, overall, we follow AUS. That's what it's called, Automated Underwriting System. Okay, so very important. If we get an approve at a 67, you're fine. Now, am I going to be having a very serious talk with you? Oh yeah, I'm going to be trying to talk you down to 50 and below. For sure. The reason that would happen is, look, it's ultimately up to you what you buy. I can say this is what you can do. You know, I don't max qualify, so I'm never going to come to you with a 67 out of the air. It's going to be if you're like, I have to have this amount. I have to have this amount. We'll show you it's possible, but then you will be on the phone with me for 20 minutes while I'm going over budgeting and everything else and all the 97 ways this can go sideways, okay? Because really when you start pushing above 55, you're putting yourself on the path to house poverty unless there's some sort of income we can't use, okay? So let's say, for instance, just you're on the loan, we're not counting your spouse's income because their credit's terrible and they make a good amount of money every year and they don't have a ton of debt and they're definitely helping out with the payment. Okay, that could make sense, right? But if it's just you are setting yourself up for a disaster. So whenever you guys are doing a VA loan, definitely ask what your debt to income is, because a lot of lenders don't care. They don't care. They got an oh, we got an approve. No. We need to think about your long-term future here. That's what I care about. I don't want you guys ever calling me saying that you're in a foreclosure because I put you in a payment that's too high. No, thank you. Okay, but could you have a 35% debt to income and not qualify? Yeah, you can. Residual income, baby. That is the one, and I'm seeing that one right now really being picky, okay? And it depends on where your income is to begin with. So generally where we're gonna have the most issues with residual income, from what I've seen, is if you're higher on the debt to income, okay, if you make a good amount of money and you're higher on the debt to income and you have a large family, that is where residual income can get short. If you make, less income, right? If you're on a smaller income, even if your debt to income's really low, like 35, I've literally seen declines over this. Residual income, if you have multiple people in your household, it can be impossible to pass. So what residual income is taking into consideration is it's taking into consideration the square footage of your house, okay, of the house that you're buying. Now that's why if you guys specifically know, hey Jen, I'm gonna want a $3,000 square foot house. Okay, tell us up front so we can put it in the residual income, because sometimes we'll look at the price point of the area. So when we're doing the calculation on a pre-approval, we'll be like, at that price point, most houses are about 1,500 square feet. Well, if you're not gonna buy anything less than 2,000 square feet, that's what I need to do my calculation off of, because residual income is taking into consideration the maintenance and cost of that house to pay those bills every month. In addition, it's taking into account, how many exemptions you have, as well as how many mouths you have to feed. So, and it's not like, because sometimes people will be like, well, it's just my girlfriend and her 3 kids. Like, they live with me, but I'm not responsible. Yeah, you are. If they live with you and you're telling me that you've got your girlfriend and 3 kids in there, I'm supposed to put them on there. Okay, I have to put them on there. You're paying for, I could show that the girlfriend offsets, right? But if she's living there with the kids, if the kids are your responsibility, we have to put that in there. Okay, that's a very unusual example. Let's do this differently. So let's say that you're married and you have 6 children. I've got to put everybody on there. Okay, and residual income is going to be calculating that you have enough money to feed everybody. Yeah, and there's different, it goes by the different parts of the country. Okay, so it's really important that you guys know there's this back end calculation. Now, where I see the most issues are honestly when we're doing a pre-approval using VA disability only. Here's why. So with VA disability, I can gross it up for debt to income. So let's say you get $1,000 a month. So for debt to income, I can make it $1,250 because you don't pay taxes on it. Well, guess what? For residual, I can only do the $1,000. Okay, so when you get into 90%, 100%, we can gross them up a bunch for the debt to income, but we can't do it on the residual, and that's where we see the trouble. Okay, now, and it depends on how many people are in the household. So should you lie to a lender about how many people are in your household? No, you gotta be honest. You gotta be honest. Now, let's say, for example, once again, let's say you're doing the loan, you're the veteran, and your husband has terrible credit, that's why he's not on the loan, okay? But he has a job. So I've got to put him in there for residual, but if I can prove he has pay stubs and he has income, I can take him out. Okay, so that's important that you guys know there are ways to remove people from residual, but you want to be honest with your family size up front. I had one recently where the application was filled out as single, unmarried, 0 children. Okay, well, guess what? In the middle of the transaction, we got a homeowners insurance quote. The homeowners insurance quote was in his name and his girlfriend's name. Yeah, so guess what? Then we also find out that there's a grandchild that they're taking care of that lives there, and it's their child. So, the girlfriend didn't have a job. I couldn't offset her, and they're definitely in that household. So going from 0 dependents to 2 made it so we couldn't pass the residual income calculation. So it's really important that you guys know this is going on. And when it happens, I'm always like, oh my God, how can we fix this, right? Because it is stressful. That's why you really want to tell us up front how many people are in the household, what's the square footage. If there's someone in the household that has a job to offset that income, let's say your 18-year-old still lives with you, but they have a job, I want their pay stubs to offset them if I'm in that tight residual income position. So beyond that, what I'm always looking at is, okay, do I have the square footage right? Okay, can you get cheaper homeowners insurance, right? Cheaper homeowners insurance solves a lot of these problems, and people don't shop homeowners insurance, which is crazy to me. You guys should 100% be shopping homeowners insurance. We've been in these positions where because the residual income was too high, they've had to try to get a lower quote, and they've been like, holy hell, it's a third the price. We're like, yeah, I guess this worked out for the best, right? And then the other thing I'm looking at, we talked about looking at, does anyone in the household have a job they can offset so I can take them out? We're also looking at, lower homeowners insurance. And then the third one's going to be paying off debt, because what also is going into that residual income calculation is your monthly payment. So if, for instance, let's say I'm short on residual income by $25 or $50, I'm going to look to see if you have a credit card with a monthly payment of that minimum. And sometimes what we'll see is like you have a credit card, you pay off every month. Cool, it had a $50 minimum payment, you pay it off every month anyways, boom, fixed, right? Other times it will be like, hey, only way I'm going to be able to do this is how much money I need to make magically appear so that you pass residual. There is not a lot, you can't really screw with residual to make it show a lower number, okay? Without lying, which you guys do not want to do. So the only way to make it so that you pass residual is to meet that guideline. So really important. And then the other thing is if you are pushing up higher on the debt to income, the residual income has another threshold on it. So it's a back end moving piece that can really affect your ability to qualify, even if you're fully underwritten. Seriously, we can fully underwrite you, but guess what? If you find a house that's 1,500 square feet more, or I find out 4 people live with you, I got to put that in. And at that point, you may not pass residual. If the insurance is 3 times what we estimated, you may not pass residual. If interest rates go up and you didn't want me to do lock and roll, right? I'm pushing lock and roll so hard right now. That means we lock your rate while you shop. I expect the market to keep on going up, so we want to make sure people are locked. So if we have you fully approved, rates go up, can't pass residual, we're toast. We're toast. So it's really important that you guys know there is this calculation that's happening on the back end with your lender. You want to make sure you go, hey, for the residual income calculation, the square footage is going to be a minimum of this. a maximum of this, right? And you don't have to be to the exact square footage, but like, let's say for instance, I want a house that's 3,000 square feet. I would probably have a lender do it at 3,600. Right? I would rather know what I'm dealing with if I find like some magical huge house, right? And then be honest about how many people are in your household, because we always find out. We always find out. And if those people have jobs, let's get that offset immediately. So if you guys are working with a lender and you go, hey, like, just so you know, this is how many people are in my household, you need this for residual, right? And they go, what? Yeah, uh-huh. They should know what residual income is. It is more important than debt to income. Residual income can kill every deal if not done properly and if you're not qualified properly. So thanks for watching, guys. I hope this has been helpful. As always, if you guys want to get a VA loan, fill out my app. My team's in contact. You get fully underwritten, and then you and I are on the phone for like an hour. Although sometimes it's half an hour. Sometimes you get bored of me quickly, which I get. Going through everything, okay? So we really want the process to be as seamless as possible, as transparent as possible, and you know, we're here to help you. So I'm licensed everywhere but Utah and Rhode Island, so please reach out. Don't work with some clown of a lender because you didn't realize I was licensed in your state. Seriously. Okay, thanks for watching, guys. Have a great day.